Good day, traders. Welcome to my YouTube channel. I really want to thank whoever that has already subscribed and is following my videos. So in today's video, we are going to focus at the 12 candle stop hunt, and it is a continuation of our masterclass series. So the 12 candle stop hunt happens during the London session. This is one of the most important topics you will get from my masterclass series. I know that most of the traders have been stuck. They don't know when the high or the low of the day is formed, and you end up taking trades early in the morning and you are caught up in the markets. The reversal happens and you take losses. So we are going to see one of the highest probabilities that you can follow in order to know when the high or the low of the day has formed. So the 12 candle stop hunt happens during the London kill zone. And as traders, we know that the London kill zone starts at 2 a.m. New York time. So we use the 15 minutes time frame as our higher time frame. We count the 12 candles using the 15 minutes time frame. We must have the bias, the higher time frame, that is the daily or the weekly. Traders, we don't just go into the markets and start counting the 15 minutes candles upon closing, but we have to be with the buyers depending on the higher time frame. And the higher time frames I always use or focus on are the daily time frame or the weekly time frame. So when you know what the higher time frame is doing, you can go into the lower time frame like the 15 minutes to look for the high or the low of the day. Then you trade according to the direction of the higher time frame. So the stop hunt starts at 2 a.m. New York time, like I said, and you mark this window using vertical lines. I'll teach you how to do this and count 12 uh, candles of the 15 minutes time frame. So from 2 a.m., whenever the 15-minute candle closes, you mark it as one candle that has closed, and you wait for another candle to close until they are 12 candles. So we expect the market to form the high or the low of the day within this window. We expect the market to form the high or the low of the day within this window. So what happens when the market is forming the high or the low of the day? It takes out liquidity into a higher time frame PDRA and then reverses. The PDRA we talk about is the fair value gap, the order block, the swing highs, or the swing lows. So you must mark those key points on your higher time frame and you wait for the liquidity in those key points to be taken. We always call them our context areas. You must mark them properly using the daily or the weekly time frame or the 4 hour if you have exceeded what we always talk about. So you mark your PDRAs and you wait for price to come and tap in those PDRAs. You go to the 15 minutes time frame and see whether we are clearly taking out liquidity. Members, we must take out liquidity. And I have always told you how liquidity is taken out. It is a clear sweep and coming back into the range. So when the liquidity is taken, we drop to the 5 minutes time frame and wait for the market structure shift. So the market structure shift, we have to see the change of character on the 5 minutes time frame. Then price must come back into the range of the 5 minutes time frame after the change of character to retest it, and then that is when we enter the market and scalp. So we take scalps targeting 10 pips to 20 pips. So this strategy we don't target for very many pips like 50 pips or 30 pips. The market normally moves for good pips like 10 pips to 20 pips. So you can target 1 to 2 R or you can target 1 to 1. You risk 10 pips in order to look for 20 pips. So I have made some schematics for you here to show you my explanation. So at 2 a.m., this is a buy model when we expect the market to make uh, the high of the day, sorry, the low of the day, and then we buy after the London session has opened. So at 2 a.m., we start counting the 12 candle window. So we mark 2 a.m. and we start counting those 15-minute candles until they are 12. So when they end and we see a clear sweep of liquidity, so we start looking on the 5 minutes time frame, the change of character or market structure shift in order for us to buy, and we take the ride up. So if it is a sell model, we mark at 2 a.m. and we start counting the 12 candles on the 15 minutes time frame. So when they are done and we clearly see a sweep of liquidity on a higher time frame, or we are in a higher time frame PDRA like the fair value gap or an order block, that is when we drop to the 5 minutes time frame to look for a change of character to the downside, and we wait for a retest. After the retest, we go with the market until we reach our profit target. So traders, I really want to inform you that this will not happen every day. In a week, it can happen 2 or 3 times. But if it happens, it is a high probability trade to take. So let us dive into the charts and we see clearly what I have been describing. So in today's trade on the Euro USD, we are on the 15 minutes time frame. We really want to prove whether our lesson is a viable one. So today's trading on the 15 minutes time frame. Let's first remove this. Okay, so we started at 2 a.m. We have marked using our vertical line here at 2 a.m. and we clearly have to count the 12 candles on that time frame. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So after the 12 candles, what happens? Price drops and takes out a lower low, which is an equal low, and reverses. So upon reversing, we see it changing character on the 15 minutes time frame. So when you drop to the lower time frame, like the 5 minutes time frame, you will see a clear change of character and you will ride the market higher, because in our bias for the week, we have a buy model and we expect price to trade higher. So how many pips have we taken from that? They are close to 30 pips, but for us, we are targeting only 20 pips out of 30. So we go back to yesterday. So the day before, we also had the same delineation of our 2 a.m. during the London kill zone, and we mark the 2 a.m. and we count 12 candles of the 15 minutes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So after the 12 candles, we see the market reversing to the upside, and it made a sharp pullback which could have taken out some traders. But if your stops were low below this swing low, you would still be in the trade to trade higher. So the market once again trades for around 12, and if you target this high, 15 to 16 pips. So still you can take a 1 to 1 R. So in this, we again see another 12 uh, candle at 2 a.m. We see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12, the 12th candle we go, make the high of the day. Some candles exceed. We had not reached the higher time frame PDRA. So once we knock into the PDRA of the higher time frame, we reverse and drop lower. So we can also calculate this. There are 17 pips to 16 pips. So it goes on and on and on and on until you can say that this is a clear gem or what you have been waiting for. So on this day, we mark our 2 a.m. Again, we count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So after 12 candles, we see the market dropping massively to the downside. And how many pips are those? Close to 20 and more pips. So this is how you can look for the high or the low of the day using the 12-hour candle, sorry, the 12 minutes candle rule. So let us go now to another pair. You may say that this has been cherry picked. You are just picking the highest probability moves. Let us go now on another pair and we see whether it is applicable. So like on today, Euro GBP, we have another delineation of 2 a.m. and we count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So after the 12, we quickly drop and take out this liquidity, and after taking out liquidity, we start moving higher. And how many pips have we moved so far? Close to 20 pips. We have already hit our target. So let us look for another probable trade. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So after the 12th, we go higher, and I think we had not reached the higher time frame PDRA, but even these ones, this reversal is enough for you to take a 1R or 1 risk to reward ratio. So let us see another one here. This is 2 a.m. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So on the 12th, the market reverses clearly and goes higher, and we count we have already reached our 20 pips. So traders, that is how you can mark and know the highest probability of the day. When you have the higher time frame bias, you drop to the 15 minutes time frame and you count. It is only during the London session. I will give you another setup of how to look for trades in the New York kill zone. This is only for the London session, and in a week, in a good week, you can get between 3 to 4 trades that you will take and get to R and pass your funded account challenge. So traders, that is it. I urge you to subscribe to my channel, to like the videos and give comments, and I wish you a nice trading day.